Making, going out, traveling with your loved ones, this is the perfect opportunity to take stock of what the hotel industry trends are looking like for the month of December, which will wrap up the Q3 quarter as well. We're now joined by Kavinder Singh, the MD and CEO of Mahindra Holidays and Resorts India, on the show now. Mr. Singh, morning. Rima here. December occupancies, what are they looking like? And with that, if you could give us a sense, what will the average of Q3 stand at?
You're right. The festive season has taken its grip. The occupancies are looking very, very good. In quite a lot of our resorts, we are full. But if I were to look at our full 86 resorts, we are still at around 85, 86%. So there are obviously some more resorts which could get full as the time closes nearby. November went off very well with about 84% occupancy. If I were to look at the full quarter, looks like we are going to be crossing the 85% levels if I look at the October, November, and December.
Okay, 85% levels. What about membership additions? I mean, now that things have come back in a big way and, demand trends have picked up in the hospitality space, are you looking at a large number of membership additions? What would the run rate be over the next 6 to 12 months?
So member additions have already gone up. If you look at our Q2, we ended up doing about 4,400 members addition. That was a 12% rise on a year-on-year basis. And as we look into this quarter and ahead, typically the Jan-Feb-March quarter is a very good quarter for member additions. And October, November, December is also good, particularly the December month. So we are looking at member additions moving up. And when we look at, as since you said, 6 to 12 months, so we are seeing our trajectory of member additions moving up northwards quarter on quarter.
Okay, that is on member additions. Good morning, Mr. Singh. Thanks for joining us. Can you also tell us what is the number of memberships that come up for renewable this time?
So in our case, as you know, that the memberships are for longer tenure, and all people do is the annual fee payment. So that's not so much, we don't call it as renewal. So most of the members pay their annual fee if they have to holiday in our resorts. The renewals that will come up will be 4 or 5 years later, when the early stage of our memberships, which we sold 25, 30 odd years memberships, once they begin to go away, then there will be renewals or new member additions that will come into that inventory, which is already built basis the capital that the members provide us.
So December is the time where we make year-end, New Year resolutions and CEOs make the strategy for next year. So tell us, what is the 2023 game plan, the objective for Mahindra Holidays, the top 3 of them, especially if you have numerical ones?
Yeah. So the top 3 numerical ones, the game plan for Mahindra Holidays is very, very simple and very clear in our heads. Number 1, we will continue to drive inventory additions. If you look at last 2.5 years, we added 1,000 rooms. And mind you, when I talk about these occupancies, this is even, with the enhanced rooms, we have been able to fill up our rooms at 85% levels. So we keep adding rooms and rooms keep getting filled. And therefore, the idea is to keep accelerating the inventory additions. If you look at Q2, September to September of last year, we added about 500 rooms in that that 1 year period. Q2 of last year to Q2 of this year, we want to accelerate our member additions. We have significant investments lined up, including acquisitions, to take our resort count as well as our inventory count. So as you know, we had said that we will do something like FY25, we will do 5,500 odd room additions. So we are going to surpass that number earlier than what we had planned. So we are looking at accelerating room additions through our own investments, as I said, acquisitions. We have about 1,200 crores capex, which is already underway. And we are well on track to add the inventory, as I stated. Now let's come to the second numerical metric, which is the member additions. Our member additions are looking good. We typically do about, if you look at last year, we closed at about 12,000. You can see our run rate. We are going to be obviously much better than what we did last year. And that is now seen in the last 2 quarters already. So we definitely will significantly cross our last year member additions. And in the year ahead, we want to beat that number as well significantly. So that's as far as the member additions go. The third metric that we want to keep in our mind is that how do we ensure that our experiences are top notch? Because that is what gets us referrals, digital. So our customer acquisitions and upgrades are already showing a very good momentum in the digital and referrals. They are at about 57-58% of our customer additions happening through digital and referral route. And our upgrades have almost doubled in Q2. When I say upgrades, it means people moving up the season and or the apartment level. So the upgrades, the overall momentum that I mentioned in the inventory as well as member additions is something that we are looking forward to in the FY24.
Okay, so you reach your target much earlier than expected, the 5,500 room target. This is a long pandemic lull that we saw, and now this whole hospitality industry sort of taking off, right? Any other way that you plan to sort of boost your either market share or your growth? Are you looking at more ad spends? Are you looking at a large amount of discounts or any kind of incentives for customers? Because we're seeing it across the board, whether it's in hospitality, whether it's in aviation, to make good this kind of boost. There are campaigns, discounts across the board. So what are you doing in order to sort of increase market share or increase growth?
So for us, growth actually is a function of, as I mentioned, both the member additions as well as the inventory additions. So on the inventory additions, as I said, investments, acquisitions, that's going to be the focus, which is on the supply side. And I think your question is more on the demand side. Yes, on the demand side, we are firing up the demand through multiple actions. We are running, as we speak, campaigns on digital. We have very, very successful campaigns that we did in the last 2 months in the T20 series. We are also creating, very, very attractive offers. As we speak, there is an offer. If you were to buy into a Club Mahindra membership, you could be going with your family to Disney as well as a tour of Paris. So we routinely come out with these kind of offers, including cruises. And that is something that we will continue to drive because that leads to the demand uptick. So definitely consumer communication, brand communication, digital campaigns, and offers for the customers, they are definitely being rolled out and are being rolled out as we speak, which will lead to a further increase in momentum, as I was speaking earlier.
All right, got that. Mr. Singh, on your margins, if I can just ask you, I know we've already seen quite a rise since the pre-COVID level. I think it's up around 500 bips. Can you tell us where this is likely to, trend going forward? The last figure that we had was around 19.5.
Oh, yes. So the good news is that despite the fact that we had pandemic, despite the fact that we, had those difficult times, but we have grown cash as well as profits during the pandemic. And post-pandemic, as you can see, our margins moved up by 500 basis points, which means despite the heightened level of activities, we have been able to grow our margins. So when we look ahead, there are 2-3 thoughts that we have on margins. Number one, we are sustainability leaders in hospitality industry. We have 8 of our resorts are green certified. Sustainability, while it is so important from the business standpoint, is also helping us lower our costs. Particularly, we have 21 resorts which are running on solar now. So we are accelerating on the resort side, the cost, management through the sustainability actions as well. And if I were to look at our, people and the way we have taken care of people during the pandemic, that we have been rated as the best workplace in hospitality for 2 years in a row. So we will continue to add value to our, team members through giving them multi-skilling opportunities, which is also helping us manage costs better. So there are cost levers that we will continue to play. And there have been a price increase that continues to happen on a routine basis, whether it is on our F&B, whether it is on membership prices. So a combination of price increase actions, combination of cost reduction actions, as I was alluding to, will ensure that our margins will remain robust as we keep going ahead. 28% margin in EBITDA and about 14% margin in PBT, while growing cash and having a cash balance of 1,000 crores in net, net zero debt kind of a
You
situation.
spoke about the, sorry to interrupt you. So you spoke about the cash balance, and that was, a question that I had as well. Any plans to do a buyback, return the cash to shareholders in any way? So as far as the cash is concerned, the decisions of the board on cash would be obviously final. The view that I have, and obviously it is synchronized with the board, is that we will continue to use the cash to grow the business.
And as far as dividends are concerned, you know that we have a technical problem of not being able to offer dividend to our shareholders, because when we moved into the new accounting standard, there has been a transition kind of a reserve that has taken into the book. So it is a very technical issue, and therefore we are not allowed to pay dividends till we are able to take care of that technical issue. So it is more technical, because we have cash, we are making profits, yet we are not able to pay dividends. But the moment we are able to come out of it, and that could happen sooner than later, then definitely there would be a plan to ensure that our shareholders are suitably rewarded. Meanwhile, our idea would be to continuously deliver on performance, which hopefully will reflect in our share price as well.
So very quickly, one final word. The inventory addition target of 5,500, which was earlier anticipated that you will hit by Q4 FY25, you're now saying you're likely to achieve it sooner than that. By when? Will it be Q1 FY25, Q2? Any updated target?
So internally, our aim is to hit that number earlier. And yeah, I mean, we are not that fine which quarter, but you can see we are tracking better than what we had planned. And it will happen because of the aggression that we have shown in being able to take in new resorts and also look at